As a small business, you might be doing your bookkeeping on your own with some kind of DIY software. You might already be utilizing the services of a bookkeeping firm. But in any event, there are a few basic points that you should know and understand about your business. So first of all, the way that accounting generally works is there are three main kinds of financial statements. One being the P&L, which is the profit and loss statement, which tracks your revenue, all of your income and your expenses. On the other hand, giving you a bottom line of whether you are profitable or not, and it gives you all kinds of other margins throughout the P&L, which allow you to assess your business's level of profitability at your margin, of product level, at your marketing levels, your operating cost levels, etc., which gives you really good visibility into your company's finances. And the second of those is the balance sheet, which shows you your assets, which is things that your company owns, your liabilities, which is what you owe, and your equity, which is your assets less your liability. It also gives you a really good picture into your company's health and shows you how much debt you've taken. It helps you understand your inventory and your working capital, and is really crucial to understand that your company's health status. And the third of those statements is the cash flow statement, which kind of tracks your cash flow in and out of your company and gives you more of an operational visibility into where your cash is going, which really helps you plan and understand your business. So when you are a small business, and even if you are doing this on your own, it's really important to track your income and track your expenses in order to get a good picture on your profitability. Now, a second point, which kind of goes without saying, but is so prevalent, is setting up a separate business account in your bank for your business and not mixing credit cards. Mix of funds causes a lot of confusion. It can end up having significant tax implications. So it's really worth being on top of your business and separating the accounts and not having a lot of commingling of funds. Another point is making sure to categorize your various line items properly. You don't need to be an accountant or a bookkeeper to do this. If you have a very early stage company, you can get a lot of data on good online sources and search, and just make sure that you are not miscategorizing data. And once you get to the point where you're not sure, it might be the time to actually start utilizing the service of a bookkeeping firm. But misclassification and putting data that should be above your gross margin line and below it, or getting mixed up between various marketing versus supplies, etc., could have significant implications. So again, if you're very early stage and you don't have too many line items, this is something that could be done on your own potentially, but once you start growing a little bigger, it's probably better to let someone who's more well-versed in all this to help you with your bookkeeping and accounting. Now, like we talked about before, one of the main statements is the cash flow statement, which shows how your cash flows in and out of the company. And especially if you're in the world of e-commerce, it is really important. Any business, that's the truth, should be on top of their cash flow and knowing how the cash is flowing in and out on an ongoing basis and how your cash flow looks going forward. You should try to forecast out in order to plan and make sure that you have enough money to manage your business and to buy your next inventory and to pay yourself or if you have employees, because otherwise your business just will not manage itself on its own. And within that, if you do have account receivables, meaning if someone owes you money for services that you provided, or account payables, which is you received a service and did not yet pay, it's worth including this into your calculations to know, collect the money that people owe you and how much you owe other people, and to plan accordingly to make sure you have enough money in order to go forward. Another 2 points, as a lot of you know, your bank accounts might not reconcile with your financial statements, and it is worth reconciling them and seeing if there are differences. Are there mistakes? Is it on your accounting side or perhaps on your banking side? Sometimes it's just a cutoff issue. You'll have an accounting for a specific month and the bank will only show the results a day or two later, so it's really just a small timing issue. Sometimes it's a more significant issue of something that you missed, or it could be on certain occasions that the bank missed. Especially if you're a small business and don't have a significant amount of bank accounts and not too many movements within the bank, then it is definitely worth doing and being on top of. And just the last general point is to keep all of your receipts, all of your invoices for audit, tax purposes in an organized fashion is definitely a good tip for good small business bookkeeping. That's it for now.